School Board work session is now called to order. We have 1, 2, 3, 4, 5, 6 members present, so therefore we have a quorum. The first item on the agenda is the adoption of the agenda. We've had an opportunity to review the agenda as presented. Is there a motion to adopt?
So moved.
Second.
Dr. Luckett has moved, Mr. Figurs has seconded. All in favor?
Aye.
Aye.
Any nays? There being none, the agenda is adopted. Now we have information items only. And the first 3 items are yours, Ms. Miller, so you can take them at your will.
Thank you so much, President Johnson. I'll defer to Dr. Green to see if he or Dr. Sivak want to make any opening remarks before diving in.
I'll see if Dr. Sivak does first, and then I can follow.
I'll just say thanks everyone for getting together. Really looking forward to spending this time. We've got several goals of the meeting today. The first goal is to start to use an analogy Dr. Green uses, building muscle around reviewing financial statements, particularly the ones we look at each month. So we'll get a bit of a refresher at the start of the meeting. Then we'll really dive into the meat of the meeting. The budget, we are in budget season. We have some big decisions to make. Also some exciting opportunities, and really appreciate the team for all of the prep materials. So that's all I'll say. Again, thank you for the time, and look forward to a robust discussion.
And Dr. Sivak summed it up. Just appreciate your thoughtfulness. This board continues to engage deeply, which is, it may seem like a simple thing, but it means a great deal to us as we try to bring to you quality materials and quality recommendations, informed recommendations. So we do invite the questions, invite your critical eye, help us to see what we might be missing or to clarify what may not be fully clarified. And so just looking forward to engaging with you in these materials. Ms. Miller, I'll hand it over to you to move us along.
Okie dokie. Thank y'all so much. Again, I appreciate the opportunity because I think this is probably the earliest in recent years that we've had a full board work session on budgets. The finance committee has worked early on, and we've engaged them, I think, right after Christmas. But I appreciate you all giving us this time. And so, as Dr. Sivak said, I'm going to give you some just a refresher of the monthly financial report, what you're getting, and then we'll go through audits, and then we'll spend the bulk of our time talking about the budget. So I need to share the screen. I'm not sure if Roz is still here. There you go. Thank you so much. All righty, so can you all see my screen? Okay, great. So every month I send you this monthly financial report, and it's a lot, and it's a lot of material. And so I wanted to just give you a refresher of what you're seeing every month. I know each one of you have gone through this with your board MSBA training, but I wanted to just give you a brief outline of what I'm giving you every month and kind of running through. I think. Okay, so again, we like to start all of our presentations with our V&Ms. I don't know who started using that, but I like that, our V&Ms, our vision and our mission. And really, I like to make sure that we ground our work, everything that we do financially, in our commitment number 5, which is our accountability and excellence, a culture of accountability and excellence. Because of course, we have a huge responsibility, not only to schools, but we have also a responsibility to taxpayers as well, because this is, like a lot of people like to say, that you treat it like your money. Well, it kind of sort of is. So, but it's all of our money. money, and we have an obligation to make sure that we are doing our work with excellence. So today, just give you a brief overview of the financial report. I won't go into the details of the numbers. I just want to give you an outline of what you're getting every month. And why do we provide this report to you? A couple of reasons. We want to make sure that you as board members and also members of the public are abreast of all our financial activities. We are very, very clear about being transparent. So if you've worked with me for years, you know I'm very transparent about the good, the bad, the ugly. Also, probably 3 or 4 years ago, there was a law passed, 37-9-18, that actually said every school district must provide this report to the board. And I am so proud to say that we have been doing this report since 2004, when I came in the district, before it was even required. So we didn't even have an issue when they passed the law because we were already doing it. And also it's an accreditation standard 4.5, which again correlates with the statute 37-9-18. So the reports, the monthly financial report by statute and also by MDE standards must contain certain reports, and those are the reports you get. The statement of fund balance, which gives you a list of fund balances by fund, and this is every month. So you get the math, the beginning fund balance plus all the receipts that we received, less the expenditures and any adjustments, and that's how you get your ending fund balance. Then you have your budget status report, which basically just shows you your revenue, your budget, what you've collected to date, your expenditures, and what you've expended to date, and what you have yet to be expended for the rest of the year. It also contains your bank reconciliation report. And I counted 101 bank accounts for the district, which seems like a lot, but at one point we had over 200, and we've done some cleanup work there. But the bank recons are a first indication that there may be some financial issue if you are not keeping up with your reconciliation. If you're like me, unfortunately, I don't balance my bank account every month. I just kind of know what's supposed to be in there. But with this, we have to balance this every single solitary month. So we have to present to you as a board within 30 days that we have reconciled our bank accounts, all 101 of them, within the 30 days of receipt, to ensure that we are accounting for any outstanding checks, any issues. This is also a secondary alert to us if there's any issues going on with our bank accounts. And then you have the cash flow report, that is district maintenance cash flow, which talks about the beginning cash balance on that day, at the beginning of the month, plus the monthly receipts, less the expenditures, and then the ending cash balance on that day. Of course, as you all were trained in your MSBA training, you always want a positive fund balance. But again, because of our timing of our board meetings, sometimes we won't see it here in our cash flow, but we'll see it later on, that the timing is really critical because cash flow changes every day. It's just like our own personal bank accounts. Today is payday, so everybody's flush. Well, if you're like me, tonight, when all the bills come out, the situation will be different. So the same thing with the district's finances as well. But the requirement is at the end of the year, June 30, that the district must have a positive fund balance in every fund. You cannot have a zero fund balance in any fund. Cash flow. So what do you look for if I'm giving you these reports every month and you get to see them ahead of time? You're going to look for in the statement of fund balance. What you want to see is positive fund balances in most accounts, and you'll see that in most accounts. What you won't see it, where you may not see it, is in those accounts that we have to do federal draws. Like we have to, at the end of every month, we have until the 10th of the next month to request funds from the federal government, from MDE, to reimburse the district. So because of timing, this is kind of where I was talking about, because of timing of when we have to present the reports to you to get it on the agenda, you may see some negatives, but that clears itself up every month because we do our drawdown by the 10th of every month. We don't receive our funds until the end of every month. But depending on how that board prep time is, you may see some negatives there. But again, at the end of every year, they're all positive. And so the example is that I've given you is Title I and IDEA. Those are funds that we have to actually do drawdowns. In previous years, the districts were allowed to book what we call anticipated cash, I'll call it that, or anticipated revenue, so that the balances would be positive. There is a change in that, and really because GASB requirements now say that school districts should report to their board in cash, what they actually have cash on hand. Because unfortunately, what it was allowing some districts to do, unfortunately, was to show revenue that they were necessarily not going to receive, just so that the reports would be in the positive. So we now have to show our reports on a cash basis versus an accrual basis or a modified accrual basis like we used to do years ago. So I've given you just an example of the statement of fund balance. I've highlighted like Fund 2610 in red, the negative $1.7 million. That's because, again, you see the expense of 1.3. We've done a drawdown. We just haven't received it in time of whatever month this was. But if you look at vocation, because vocation actually had a fund balance, they had a little bit of fund balance. We've actually expended more than we received, but they have a positive fund balance because they had a fund balance to begin with. We're not really allowed to have a beginning fund balance in IDEA, because the objective for IDEA and title is that you expend all your dollars by the end of that year. Their fiscal years, though, our fiscal year runs July 1 to June 30. Federal programs fiscal years run October 1st to September 30. So we have that timing issue that goes into play. So there's a bit of trust, and that you have to trust that we are doing our drawdowns timely. And not only that, just not only trusting us, the MDE reports to the superintendents and the school districts every month about where we are on our drawdowns and where we are on how we obligate our funds. So this is what you look for in the statement of fund balance. In the budget status report, what you're going to look for is to make sure that no fund has overspent its budget. So there still should always be every month a year-to-date unexpended, which is that last column. In the bank reconciliation report, you should note that every bank account has been reconciled, and a new requirement, a new suggestion, I guess, or best practice that MSBA has given, along with recommendations from the state auditor's office, is that the CFO, or the person that's responsible for reconciling those bank accounts, actually signs and attests that these have been done timely. And then a positive cash flow, as we talked about, at the end of every month. So the budget status report, I've just given you an example of where the last column would be the unexpended. I can't run this because it's a PowerPoint, but the unexpended, you always want to have a positive there. That's how you know that you still got budget to spend. And then the bank reconciliation, really bad copy, I'm sorry, but I wanted to show you where I actually sign on that second page. And that's my testament to you that says that we have reconciled our bank accounts within the 30 days, and they are all accurate. Now, you do get a list of every one of those bank accounts, because you get all the outstanding checks, the checks that we've written. But that's the key that you're looking for, is that signature saying that they have actually been reconciled timely and accurately. The cash flow report is just giving you an example. Where you want to look is the bottom line, where it says ending balance. And I'm sorry, it's a little small, but you get this again every month. But oops, sorry. You want to look for the positive fund balance at the end of every month, the positive cash balance at the end of every month. So that's a very quick run through, I think, of the monthly financial report that you do receive. I try every month to make sure that I give you highlights. I think last month I mentioned to you about how the ad valorem showed up as a negative because of the way we made a payment. Next month, you will see we actually paid the TAN back early, Dr. Sivak. I'm really excited. We got that paid off today. And we saved about $40,000 in interest. So you'll see that pay come back. So every month I try to make sure that if there are significant swings either way in any report, that I point those out to you, as well as give you some comparisons for historical information. So I'll pause here for questions that you may have regarding this.
I don't have a question, just a comment. This was a really good refresher. Thank you.
You're welcome.
I'll also ask if there are no specific questions. I'll ask if board members, if there's a particular report that you'd like us to maybe spend a little more time on as we're reporting out monthly, or you know, as Ms. Miller has already said, we've been working towards flagging the things that we think might spark some question or that might raise an eyebrow. So we want to flag that for you in a preventative way, or take the initiative on that. If there's a report or some aspect of the financials that you'd like to hear more of our kind of thinking about, or kind of you know, forethought, then we're happy to do that as well, if there are no specific questions now.
I would make one more. First of all, this, I echo what Ms. Johnson said. This was a very helpful refresher. I would ask Ms. Miller if you could circulate these slides for the board as well, if we haven't gotten them yet. And one thing that would be helpful for me, typically in your monthly financial report, you usually run through a bevy of numbers at the start of your report. It would be helpful maybe in the next iteration of that report for you maybe just to slow it down and just show us in the board materials, or even cue us when you reference a number, you know, so this number that I just referenced, this is in the budget status report, or this is in the cash flow. Because typically you'll reference like the fund balance is X or Y, or you'll notice this, you know, and I think those are all important numbers for us to know. But I think even for myself, sometimes I can't jump from the comments you make to identify the number in the report. And so that would be a request that I would make maybe in the next, because there's a formula to it. It's typically the same update. And so if we do it once or twice, I think that would be a helpful exercise, for at least for me, it would.
Absolutely, I certainly will. And I tend to try to not take a whole lot of time. And so I tend to talk a little fast. So I'm sorry about that. And the two PowerPoints that I'm doing today, this one and also the next one, is in Novus, but I will certainly, and I added them late because I was still working on them. So I will make sure that I get hard copies to, I know there are 4 board members that prefer hard copies, and I'll get those out to you as soon as possible.
And thank you for that request and recommendation, Dr. Sivak. We've definitely been thinking about ways to ensure that these aren't just reports that we make, but that there's some engagement and we ensure your understanding. And I would also ask, in the moment, y'all, you know, we're at your disposal. And so if you know, we're moving quickly through information, or we haven't referenced it in a way that you can follow along with the materials, because, you know, that's why we provide the materials to you, please stop us. Please stop us. You know, I've been preaching and pushing and challenging us not to act just out of compliance, but because it's, you know, important work to do. And so, you know, these are not just compliance reports for us. And so, yeah, definitely ask us to stop or reference or give you a page number or whatever, so that you can follow more closely.
I want to add also that I really appreciate your report, Ms. Miller. I'm able to, well, I'm learning, you know, unfortunately don't have the financial knowledge that Ed has, and this is really, really great. And thanks, Dr. Green, for saying that, you know, we can ask for, well, I stated like this, if we need a one-on-one tutoring, that is possible.
Absolutely.
But thank you so very, very much.
If you can't tell by now, I love this. So I'll be happy to talk about numbers like for hours. So that's one of the reasons I try to go kind of quickly, because I can go on, but certainly open to any kind of one-on-one or questions. Please ask us. Because again, this is not only for you, but to make sure that our constituents in the city are making sure that y'all are not just rubber stamping what we're giving you. You're asking questions and you're confident in our ability to maintain finances.
Yeah, thank you again.
All right.
Say that I did a one-on-one with Miss Miller, and it was great. She really helped break it all down and get a really, really good understanding of everything. And I'm still learning myself too. So even this was still helpful. So thank you.
All righty. Well, if there are no other questions, I'm gonna go to the next one, which is
There's one more, Miss Miller.
Oh,
Sorry,
sorry,
I know I started off with none, but then as the conversation goes on, I do have one, and it may not be the smartest question, but it's still a question that I have. Is the fund balance an actual account, or is it a formula?
It's a formula.
Got it.
There's no account for fund balance. It's actually a formula, which is a really good question, because everybody always talks about fund balance like it's this mystical unicorn thing, but it's actually math, accounting rather. Yeah.
Thank you.
All right, are we ready to go to the next one? Okay, so let me get here. Oh, wait. Okay, so now I'm trying to, okay, so you can see the audit, the 2020 audit. Okay, so this is our review of our 2020 annual audit. Two reasons, well, again, this is something that is required. It is a compliance issue, but again, this is an outside, or this is an independent auditor that comes in every year that does our audit, and we work really hard to get things done and get things done timely. I will tell you that this is our last year with the current auditor. We have a requirement that every 3 years we change auditors. And so Mr. Tyrone James, who has been the principal with the audit firm this year, will present to you briefly at the board meeting on Tuesday, but I wanted to give us an opportunity to talk at length, a little bit more detail about the annual audit. So I'll go on. Again, our V&Ms about the audit, about the district, and also again, our strategic plan, our commitment to accountability and excellence. And Dr. Green and I were talking yesterday, and we're under a plethora of audits that are ongoing, and people get nervous about audits, but I see it as an opportunity for us to get better. It's always helpful, because we can get complacent with the things that we do because we know we do them this way, but it's always helpful to have somebody come from the outside and look at it a little differently. So I don't take these as negatives. I get a little anxious when they're back to back to back to back like they are now, just because of exhaustion, but this is why we do this. So today we'll be reviewing just the highlights of our 2020 financial audit, and that's for fiscal year ended June 30, 2020. We'll talk about our financial position and then our review of our findings and corrective actions. So just to give you an idea of what the audit is and what all this lingo means, again, I apologize for the 89 or 90 or so pages that I put in the Novus, and I know some of you got hard copies, and if you have nothing to do on a Saturday night with Dr. Green, ask, what do you do when the power goes out? Read the audit by candlelight. It's just fun. It's fascinating. So basically, there are two types of audit opinions, and modified is there are some misstatements. You don't want a modified accounting audit. Unmodified means basically that your financial statements were fairly accurately, and we were done in accordance with GAAP. Again, we received an unmodified opinion for 2020, and we've not ever received a modified opinion in the history of the district that I know of. Fund balance, again, Ms. Johnson, here's your question. It's a math. It's the total assets less the total liabilities in each fund, which is basically what that is. There's a reserved fund balance, which is what you have to reserve for specific purposes, and then an unreserved fund balance, which you have available for any fund, any purpose. Cash balance is the level of monetary assets or cash at the end at any given time. So, and when I talk about the cash flow report, this is how these tie together. That's what the cash balance means. Your net position is the difference between all of your assets and liabilities, which is not just cash. Assets are your buildings, your inventory, your vehicles, all of that. Your liabilities are every bill you have, your payroll, your lights, gas, water, your debt service. So that's what it looks at the net positions. There are several types of findings, and people get panicked about these, and some of them should cause panic. If you have a deficiency, that talks about where there's maybe an issue with internal control, and there's not an opportunity, there's an opportunity that you can put some more controls in place. A lot of times, if there's a lack of internal control, things may happen that are unusual. And unfortunately, in the finance world, you can put things in place to stop all the things that you know, but every now and then something weird is going to happen and you don't know. But then you put those internal controls in place, and that hopefully clears up those deficiencies. If there's a material weakness, that means that there may be a possibility that a material misstatement would occur. Again, the way you prevent that is putting in internal controls, additional internal controls. A significant deficiency means that it's less than a material weakness, but you need to give it some attention. And so you'll see those terms kind of tossed around. They're different for a lot of different folks. There's no real threshold that talks about if you're off by $500, that's material. Because what's material for JPS, like a $500 misstatement, it's going to be immaterial for us in a budget of $350-400 million. But a school district that may have a budget of 100 million or 250,000, $500 may be material for them. So again, it has to be, you have to put it in perspective as to what we're looking at. When it comes to our financial position, our net position decreased by 1% from 2019, but we are still in a positive position. Several years ago, the state required, they put out a GASB guideline that requires all school districts to show the liability or the amount of money that if everybody retired and everybody who's retired in the district, how much they're being paid in their retirement benefits. We now have to show that on our books, even though we don't pay it. Basically, what that did was that pushed that liability, at least on the books, back to the school districts to kind of put our funds in a bad report position, but it benefited the state because that meant that they didn't have the liability. Although those of us who are familiar with state retirement know that that is not a liability of a school district. That is a liability of the state. So we still have to show that, and that puts us in a bit of a negative. You'll see it on the financials, and I'm gonna refer you to a page, but you just, and I'm sure you don't have it handy, but just make a note. That's going to be on page 10 of the audit report.
Are you able to flash it up?
Nope. But you'll see that, and I'll be a little bit better prepared. And I just thought about pointing that out as Dr. Sivek's comments for the financial report were given, but I'll make sure I highlight this to give you the page numbers. Our general fund balance decreased by $1.5 million from 2019. If you recall, board members, we budgeted to use $2 million of fund balance to balance the budget, and we actually only ended up using a net of 1.5, and that's because we had some changes in inventory, some positives and negatives, and that's where our fund balance decreased. And I'll talk more to you about fund balance and what that looks like. Our capital assets decreased by $6.3 million, basically because of the disposal of equipment, furniture. Every month when you receive those reports from me that say we're disposing of these assets, this is where this number comes from. And also our long-term debt decreased, which is a good thing. That means we're paying our debt off. And we retired that $16.3 million, which was that old debt, if you remember, that was rolling off that we were able to restructure and refigure. So that's a good thing. You want to pay off your long-term debt. So let's talk about general fund balance. We have two policies that govern our fund balance. There's a policy DGA, which is the policy of this board, that says you must have an unassigned fund balance in general fund at fiscal year end of no less than 7% of total revenue. So as you can see in the yellow, that's the total revenue. So total revenue, for comparison's sake, in 2019 was $188.8 million. We had an unassigned general fund balance of $21.4 million, or 11.34%. And we are well above our 7% in 2019. As a comparison, in 2020, we had a slight decrease in our total general fund revenue to $188.2 million. But the unassigned general fund balance at June 30 was $20.6 million, which is not 10.97%. So again, there's this policy, there's the board policy that requires no less than 7% of total revenue, which again, we're still, if you can see, and I would love to, this makes it even smaller if I go back historically, but I've got this back to 2003, 2004. Back in 2009, I'll say we were low. And then in 2014, I will show you on the next slide kind of where we've come from on district maintenance. So I'll pause here for any questions that you may have. And again, these documents are in Novus, and I'll be happy to send you hard copies, get these hard copies out to you as well.
So is this the reserved fund balance?
This is the unassigned fund balance, meaning
Okay, but
that's
it's not the reserved fund balance.
correct.
Okay, got it.
Okay. So the
And
next
just one quick flag, Ms. Miller. I just checked Novus and I did not see the materials in the board materials. So I was just flagging it.
Yeah, I think I did it after Roz stitched. And so I think when she stitches, it'll be back out there.
Okay.
But
Great,
as a matter of fact, I'll email it to everyone so you can have it as well. Okay.
Great. Thank you.
And Ms. Miller, let me hold you for just a second.
Sure.
Dr. Sivak, if I'm finna go in the woods here, just let me know and we can take it up offline. You just said districts must have a fund balance of 7% of total revenue.
For general fund, that's our requirement. That's the district's requirement.
No, so we made that requirement.
Correct. There are other school districts that have, I know, somewhere around 10. I know Hinds County, let me say this, Hinds County used to have their own internal policy that said 10%. I know there are other districts that have somewhere around 10 to 12 to 14% fund balance. When we were struggling with fund balance, the board at the time did not want to set something unrealistic. And so 7% is generally what's accepted as a fund balance policy, which is what the district went with at that time.
Okay, so you don't feel, in your professional opinion, that this is restrictive?
No, I don't. I think it's actually pretty liberal. I would need a little bit, we could possibly go up a little bit, but I think we're fine at 7.
Can you clarify our states specifically? I thought the state had Ms. Miller, a baseline or minimum requirement.
That's the next slide.
Got it. I think that helps to also respond to Mr. Figure's question.
I'll go to the next one, and then if Mr. Figures has a question. So here is the state policy, which is different. I want to flag the difference. Ours is general fund balance, which encompasses all of the 1,000 accounts, district maintenance 1120, exceptional education 1130, alternative ed 1140. That's what makes up the general fund. When the state requirement is that you have a 7% fund balance of district maintenance, which is a little bit more restrictive. That only talks about 1120, which is the operations account, which is the basic account that we talk about. So here's where the requirement is for accreditation policy 4.7 that requires 7% fund balance, total fund balance, whether it's restricted or unrestricted, Ms. Johnson, of district maintenance. So in 2019, we were, I'm sorry.
Okay. Oh, sorry.
Oh, in 2019, we were at $203.2 million with the ending June 30 fund balance in district maintenance, which again is just 1130, of $20.4 million. We were at 10.0%. I like to make sure that we calculate how much the 7% would be and tell us how far we are over that. This is the year in 2014, as you can see the negatives where I was talking about, where we were below, well below the requirement for accreditation. I will say that accreditation policy 4.7, typically the consequence of having a less than a 7% fund balance at the end of June is an automatic takeover. However, back in 2014 and 2015, what the state said, because a lot of school districts were coming out of, Katrina and all these things that were going on with the economy, what the state put in place was, for those couple of years, if you were below the 7%, you had to provide to the state a process or a plan to get yourself back to 7. We did that. And so we were able to make that climb. In 2020, that's June 30, our total revenue in district maintenance was $202.3 million. We had an ending fund balance of 19.4. The 7% of the 202 is 14, which means we have a balance of about $5.2 million that we're still good, but we fell a little bit to 9.61%. Again, above the 7%, but we are a little bit below where we were at the end of 2019. And again, part of this is we budgeted, if you recall, to use our fund balance to balance the budget for 2020. So I think that, Mr. Figures, Dr. Green, does that maybe clarify the difference in the two? So we have 2 fund balance policies that we are monitoring at all times. We're monitoring our district policy, and we're also monitoring the state policy. The district policy doesn't necessarily trigger a takeover, but I will tell you that every time we go, when our bondholders, we look out for banks, they look to see where our district is as far as meeting its fund balance policy, because they don't necessarily look at the state policy. They want to make sure that school districts are making policies and fiscal policies that they can live within and that make sense. So it's always really good to have a good fund balance policy, a pretty strong fund balance policy, and stay within it, which is why you'll hear all of us say we're very protective over fund balance, because this is our savings. Even though it's, accounting wise, this is our savings. And I will tell you, at the end of June, in our general fund balance, about 46% of this $20 million was cash. The rest of it is inventory, buildings, all the stuff that we own, all those laptops and computers and everything that we own, assets that have value. But about 46% of that was cash. So I won't belabor that unless there are additional questions. Okay. I'll go on to talk about our revenues and expenditures in general fund. Again, this is not just district maintenance. Remember, general fund, when it comes to the audit, talks about all those funds on the budget report and on the fund balance report that start with 1,000. So local sources, I think we talked about this. I know we did at one of our monthly meetings. Local sources, we received more ad valorem this year. And we recognize that in general fund. The consequences of that are that pushed our number out to charters, but that's a good sign. Our state sources fell off just a little bit, and that's again not necessarily MAEP in district maintenance. Again, it's all those other funds, and being able to receive additional funds in IDEA from the state, the Medicaid reimbursements, all of those help make that difference up. Our federal sources in general fund are pretty steady. We've seen that major decline, and we saw it in 2018 and 2019 because most of those federal dollars have now gone on the true federal side. So we don't see very much in general funds. And then of course in 16th section, we've talked about how we'll see some decline in 16th section just because, again, we lost one of our largest lessees, and some of our other ones have fallen off. The good thing that I love to see right here, and you will note that, of course, the conversation is always about where you spend more money on instruction. Are you spending your money on instruction? Are you spending your money on instruction? Look at where we are over the past 3 years. We are consistently spending our money in instruction. And that's something to be really proud of. Support services includes those supports that are making up instruction, like the principals, the assistant principals, guidance counselors, all those expenses that go to support school. This is direct instruction, teachers and expenditures related to them. But when you add these two numbers up, that's where we're spending our money. So you can clearly see that we're spending our money in instruction. Non-instructional services are those administrative costs, central office, those folks that are not necessarily tied, my office, that are not necessarily tied to instruction as it relates to accounting. 16th section, we certainly are not seeing the expense here, which you don't want to see a lot of expense here because you're not seeing a lot of revenue there. So you want that number to stay low. Where we will have some challenges are areas in our 16th section properties that are not being leased, but we're having to maintain them. Unfortunately, because of a lot of places where our 16th section leases are located, we're having some issues with people breaking in, homeless people coming and making damage, and we're having to spend this revenue that we do get from 16th section to keep those monitored and closed up, which is why Mr. Albright and I are working diligently to try to get those leased out as quickly as we can. Then our debt service, we talked about the fact that we're paying off debt service, and this is exactly what we want to see. Okay.
Where, Ms. Miller, I hate to keep interrupting, but where is campus enforcement and what we paid for resource officers?
That's all the non-instructional services in this, in this 66 million number. Not specific to campus enforcement, but that's where those non-instructional expenditures are.
Okay, thank you.
Mm-hmm.
I'll just note, as y'all hear us coming to you with changes to staffing and kind of contracting some of our non-instructional services, offices, positions, et cetera, that we're definitely mindful of the comparison of instructional expenditures versus the non-instructional. obviously there's a place for it, there's a need for it, but we're mindful of that as well. So just something to note.
I think as Dr. Green says it, we're in the business of instructing. That's our business. That's our core business. So that's where you want to spend the money. That's where you want to see this work. All right, so we'll go on and talk about our audit standards. There is a state compliance review, and then there are federal findings. And so we had some findings this year. And I will tell you again, like I said at the beginning, I'm not worried about findings that are, as long as they're not waste, abuse, fraud, I'm worried about them because we need to get them corrected. We need to get it right. But what you'll find here is the findings here are fixable. And the ones that we have put some things in place for every last one of them to get them corrected so that they won't be repeat findings. So I'll just kind of run through them to give you some ideas of what the findings were. We reemploy retirees with PERS that are retired with PERS, true retirees who come back, and they can only work a specific, they can only earn a specific amount of money. And also the forms that when we reemploy them have to be filed with PERS within 5 days of reemployment. So our last year in 2020, we had 44 retirees that worked for us, and 2 were actually paid more than that were allowed. And 2 out of 44 is, for me, a lot, but we have put some things in place. We have a verification system now with human resources and PERS to verify receipt of those PERS forms, as well as we have done, it's, albeit at this point, it's a manual process, but we manually review every retiree's paycheck at the end of every pay period to ensure that they will not exceed the amount that they've earned. We notify then if they're coming close, we notify the principal where they're working. Generally, they're either in a school, or a lot of times we'll reemploy food service, child nutrition workers, or bus drivers, and we have to monitor them as well. So we have started a system of monitoring them. Principals and administrators and employees are getting those emails to let them know when they can stop, they have to stop working. So we have gotten this process done, and looking for ways to make this electronic. But right now, the manual process of looking at pay, because right now I believe we have 42 retirees that are working in the district. And what I found this year was a lot of the retirees actually keep up with themselves. So that's very helpful. But we have a process in place to correct that. We had finding number 2 was we had instances of invoices paid after 45 days of receipt. The law says that we must pay within 45 days of receipt, or for any undisputed invoice, or the vendor could charge the district up to 1.5% interest until the check has been mailed. We have had to work on this to make sure that we put procedures in place to make sure that we get this information back from our schools and our vendors in a timely manner, because we are also now required to put every claim on the claims docket. In previous years, we could let a check go and we would bring it to the board and you all would ratify that. The state auditor's office came out about 2 years ago and said, you now have to do a claims docket, which is what you see when you see my accounts payables. Those are all those payables. And we have to make sure that not only are we getting them to you within time, but we also mail those checks. We've actually started a process in place where we'll be electronically paying a lot of our vendors so that we can speed up that process, because Attorney Turner and I talked about this. We have no real way to prove that the check has been mailed, but we do have a way of proving it if we've done it electronically. So we do have a process in place to correct this. Finding number 3 was that, and the finding reads, board members, superintendents, and purchasing agents must be covered under a separate surety bond, which is why you all got new applications from me last week to sign. Previous guidance, again from the state auditor's office, indicated that board members could be under a blanket bond, which is what we have done for the last 3 years. This year, it came out that when the state auditor's office was out doing compliance reviews, they were writing school districts up because they said the board members must have an individual bond. We used to have that before. Then we flipped to a blanket bond. Now we're going back to individual bonds. So this will all be corrected. It has been corrected. Every one of your applications has been submitted, and we should have bonds for you in the next week or so for you to sign. Then 16 section leases were delinquent more than 60 days were not canceled. We had 5 instances of 73 leases. And quite honestly, board members, we have lessees that are struggling to pay their lease. Again, not to make an excuse about where they're located, but they are located, most of our properties are located in an area where it's difficult for them to maintain retail stores. They're having trouble getting businesses and people into their businesses, so they are paying later. We have clarified with the Secretary of State's office that there's a process by which I can bring those to you when a lessee has identified that they are struggling with a payment or they need a payment plan, that we can bring that to the board. And if you feel as a board, and we feel it as a recommendation of the administration, that it's in the best interest of the district to keep those lessees in place on a payment plan, then we can do that. And so that will start immediately. We, for example, we have a trailer park. I'm not sure if you all are familiar with this. We have a lessee that is actually running a trailer park off of Gallatin Street, and they have asked to pay their $15,000 annual payment in monthly installments of $1,500. So I'll be bringing that to you for you to approve that payment plan, and that should clarify that issue. Then we had a state compliance, another review that we had only 2 out of our 100 accounts that were not in an approved depository. And one of these we knew about because we were in the process of closing it. It's a claims account, and we wanted to make sure that all the claims were clear. So that account had not closed by June 30, but we have since closed that account. We were converting it over to a Trustmark account. And then the other account is the cafeteria plan administration. And this is where I like to say, you know, auditors are great, but they don't always get it right. We have a cafeteria plan that we deposit district funds or employees' funds into. It's kind of like a savings account for employees, and it actually has a tax benefit to participate. And when an employee has a claim, like a medical bill that's not paid by insurance or child care that they need to get reimbursed for, they submit the bills to this third-party administrator, and the third-party administrator gives them their funds. The auditors this year took a pretty hardline approach to say that even though it's not our account, we should have it in a depository because it is the district funds. This is brand new because this account has been separate, I know, my entire career, but in order, I didn't necessarily agree with it. I've talked to some other school districts. One in particular, I know Madison County had the same issue, and they went ahead and moved to their depository as well because we use the same third-party administrator. And so we have moved that account, or we will by April 1 have moved that account to Trustmark. So we won't have that finding either. Our financial statement findings, we had 12 purchase orders out of 30 that were tested, that were dated after the date of the invoice. Again, this is where we need to do more training. And we've done some training with our senior team. And also yesterday, we trained our principals and our extended team on the requirement that purchase orders must be obtained prior to receiving goods and services. And it's just a lot going on. And I will say 30 is not a big test, because I can tell you we probably issue on average 800 to 1,000 purchase orders a year. But we have put some training mechanisms in place that if an invoice is received or presented to us for payment without a purchase order, that there are some processes we will have to take in order to get that paid, if we even get it paid. Unfortunately, I always used to say that's a donation to the district that the employee will have to make. But we want to make sure that we are providing the training that's necessary for our staff to understand what the procurement processes, rules, and regulations are. I wanted to give you just some examples of some other findings that are very similar to ours in other school districts, just as a comparison, so that you will see that, you know, there are several school districts that had the same thing with the 16th section. Again, the PERS reemployment is a challenge for a lot of folks. We've had some challenges. It's interesting that ours was listed as a significant weakness, but in DeSoto County, you'll see that they had the same issue, but it was identified as non-material. Again, sometimes this depends on the type of the auditor that you have, because all of us have independent auditors, and where you see it says state auditor compliance report, that's where the state auditor comes in, and they tend to be a little bit more granular in their review. But wanted to just kind of give you an idea of what other school districts are having some of the same issues. And that's not to give an excuse, but that's an opportunity for us to get better. Our next steps, again, I'm sorry.
Just a note on that. And board members, I just want you to know that I urged, or in our discussion of the audits and findings, my discussion with Ms. Miller about those, we decided that it would be helpful for you to have some context about some of these findings, because, you know, if this is not something that you're looking at all the time, or if you don't have it in context, well, what are other districts experiencing? Are these the kinds of things that you see in other districts? How different is this report? And are these findings that we're getting from, you know, what you're seeing in other places? And as well, again, given the size of our district and the number of purchase orders, the number of employees, the number of transactions, accounts, amount of money, all those sorts of things, just want to make sure that as we get this feedback, that we certainly see it as opportunities for us to grow, but we want to make sure we're keeping it and seeing it in context. And as we report it out to you and to community, that we're doing that for you as well. So that's why we wanted to provide some of these examples of findings and feedback that other districts have received as well. Some of them in keeping with feedback that we've gotten.
So I'll go to next steps. We are committed this year again to providing technical assistance on policies and procedures, especially as it relates to financial issues. Like I said, I believe it was 2 weeks ago, we provided some information and some training to the senior leadership team. On yesterday, I spent some time with principals and their administrative teams. We'll also spend some time at the end of March on the early release day with the office managers and the office staff to train them again. And, you know, as soon as we have a lot of turnover, especially when it comes to office staff, we have to make sure that we are providing this training ongoing, not just one time a year. And that's what we've committed to doing, to make sure that our staff is trained and know what the policies and procedures are. As I said, we've initiated electronic pay to our vendors so that we can facilitate quicker payments. We are putting measures in place to monitor compliance. Ms. Lyons is working with her team to ensure that those PERS forms are submitted timely and received timely. We're in conversations now with PERS. I've asked them to give us some type of feedback when they receive the forms. We normally don't get anything from them. And so we've started to work with Ms. Lyon at PERS to help us with that, because I think not only will that help us, you saw the number of school districts that have the same issue with the PERS retirees. And then we have addressed all our areas of non-compliance. And again, as I said, for example, the one of the bank accounts will be opened on April 1st, and that will be corrected. I would like to say that if you remember, board members, back last March, a year ago, we were advised by the state auditor's office that they were going to come in and do a compliance review, which is very similar to what they've done in school districts surrounding us, Vicksburg, Warren, Clinton, Madison, Hines. They've done quite a few. And because of the pandemic, they waved us off and said that they were not going to come. We were notified on Friday that they are going to resume their compliance review. And the good thing about their compliance review is every finding that I showed you in compliance, that is the same audit document that they will use, that our independent auditors have used. And so they will come in sometime in April. We've been advised that we'll have 6 auditors that I would anticipate being here sometime between 3 and 4 weeks. There will be a charge for that, somewhere in the neighborhood of $20,000 to $25,000. And that's on top of what we've paid our independent auditors to do. But they will come in and issue their compliance review and look at some of the same exact information that we looked at, that our independent auditors looked at. So I know that's been a lot, and I apologize, but I wanted to give you some real information on the audit and where we were. So I will pause here for questions, reactions, reflections.
I just want to say I appreciate your work and your team's work, and I like to always know what's going on in other districts. So that was very helpful. Whoops.
It sounds like all of these that have been noted that we're in a position to be able to fix them relatively easily, and that nothing is fundamentally broken or wrong. And I applaud the team for that. I was interested to see how many districts, I'm sure that was an exhaustive list, have overpaid in PERS. I don't exactly understand how that happens, but okay, I guess it is something that happens in various districts. But anyways, that's just to say, good job, well done.
Thank you. I think the thing about us too is that we employ, and we haven't over the last couple of years, but when we had a severe teacher shortage, we were employing a lot of retirees, which is twofold. They were coming in to help us when we couldn't get teachers, but then they were also, a lot of times our teachers will retire, and I think when they get home, they're like, you know what? I think I want to go back, Mrs. Hilliard. And so we just didn't have real line of sight with it. And so we now are really looking at it. And this is one of my personal projects that I'm doing. So all 42 of the ones that are working this year hear from me. So thank you, Dr. Luckett.
Yeah, it really is that. There's a need. Our retirees have the experience and the will, the desire to support and fill the need. We didn't have. We're building stronger controls as to exactly how many hours can you work as a retiree, and having something built in to where it's not a week later, someone's been working a week's worth of hours over what they should have been, and we catch it. How do we know as we come up to that point? How do we know from day one how many hours they should be working? Communicate that to them, or work it. Oftentimes they can tell us, but make sure there's understanding of that, understanding with the supervisor, and plot that out on the calendar. So your last day working 4 hours a day, your last day will be X. And if we keep to the schedule, we shouldn't have any problems. And again, there's some monitoring of that. Those are the kinds of things that we've just, when you're in need of support and folks are willing to work with you and engage, you take that and run with it. We've got to monitor more closely.
That makes a lot of sense.
I was one of those retirees that was overpaid, Ms. Miller. And of course, when I retired and I came back into the district and continued as the coordinator for the International Baccalaureate Program, I was overpaid. And of course, I did repay that money. So I'm sure that is still practice, that when they are overpaid, they end up repaying that money.
And that's one of the reasons that we committed to it. What we understood was that they could only work a certain number of hours.
Mm-hmm.
It's clarified now that it's dollars. And so I had one retiree that I got really, really nervous about this year because I was over by $3.27. And I was ready to argue that it was going to be non-material, but turns out this retiree had already quit. She knew when her time was up. I had just calculated, and like Dr. Green says, trying to forecast it. And I had her too much by $3.27, but she had already left and we're good. So we think we have some measures in place.
Yeah, mine was money, not hours.
I'm in a place where it's loud, so if it's too loud, I'll put it in the chat. I do want to flag the purchase order and payment finding. 12 out of 30 does give me a bit of concern, given that it was a random pull on the 30. If you extrapolate that to 1,000, that's 400. And so I do want to acknowledge there has been good work, but I don't want that to go without notice from the board. I also wanted to note that when you look for other districts, it was just one that we found. It wasn't like the retirement finding. And so I just want us to, I don't know if there's an internal audit functions that we can look at to monitor improvement over time. So again, I just flagged that. And another question I have is were there any repeat findings in this audit?
Yes, hold on one second. The PERS retiree was a repeat finding, and the 45 days, the payment within 45 days was a repeat finding. But we think with the introduction of the electronic payment, we will have that process taken care of. And the same thing with PERS. We've got some processes in place. Yeah, that's a challenge that my team has taken very seriously, very, very seriously. It's likely to cause some pain points for some folks who are not aware of the process. As a matter of fact, I'm working with a department now that, didn't do a purchase order before they got services rendered. So that's going to be something that they're going to have to deal with. And that's not to say that issues won't happen. I'll note that we had a payment to a contractor a couple of weeks ago that we brought to the board that was late. And we had to notate that. Well, as a matter of fact, we owed it. It was late. And so that's going to be, a finding. Sometimes those things just happen. And I think, as Dr. Green said, we have to put it in context of, when we have a big contractor, that there are some processes that have to go in place that we have to get better at, and making sure that we present the invoices timely. Mr. Albright is working very close, and his team are working very, very closely with us to make sure that doesn't happen again. So we're working very diligently to make sure that we're paying within. My team is really this year really adamant and diligent about putting things in place so that we will catch these issues. We're basically harassing folks to make sure they get their information into us on time, and make sure that we get it to you all in time on the board appropriate board material so we can get it paid.
And all that being said, we also hear that it's not acceptable for us to continue at this rate. And so Ms. Miller and I, and she and her team, in addition to all the hard work that folks are doing, we're also looking at what accountability looks like and setting goals around this. We do, while we already know that we've got at least one instance that, could or will likely be flagged in the next audit because, we have clear line of sight to it. Our expectation is that the data that is reported next year in the audit is better than the data that's reported this year in the audit. And so we invite you to join us in just kind of holding us accountable in those ways. So point very well taken.
Thank you.
So I'll move on to kind of why we're here. If there are no other questions about the audit, like I said, the auditor will come in on Tuesday night and just give a very brief overview of the audit. It will not be to this detail, but again, as I send this to you all, and as you review the audit, please send us questions so that we can spend more time with it. And if we need to come back to another work session, we're happy to do that. So is it okay if I move on? Okie doke, let's see. So now let's talk about the budget. So the 21-22 budget is in development. And as we talked about early on, we are really excited about starting this process very early. And it's early for us to be presenting it to you all, but this is not new to us. We started this process back in November to start looking at ways and what the budget was going to look like. So I'll just kind of go through some things, and I'm not catching the chat. So Roz, if you can monitor that for me and make sure if there are notes I need to respond back to, I'll do that after this is over. I wanted to just give you some idea, and we're going to focus today's work on the district maintenance budget, which is 1120, which is the majority of where all of our operational expenditures are. So I wanted to just kind of give you an overview of where we were, where we are today, and then where we are projecting for next year. The good thing is that we've started this work early. One of the challenging things is, if you've been watching, of course, I'm sure you have, the legislature, they have not taken up the funding bills yet. There has been some conversation though. I think yesterday there was a House bill maybe passed, no, a Senate bill passed that is projected to hold districts harmless for their ADA, to give us the same ADA allocation as the 2019 school year. So we're hopeful that that will occur, because of course the majority of our funding comes from MAEP. But I just want to kind of run through this with you to just give you an overview of where we are. We're working with two projections here right now, and just kind of talk about this. So this is the district maintenance budget. These are the revenue items. Can everybody see this pretty well? Okay. Again, I want to just point out some of the larger dollar amounts. The ad valorem taxes from local government, that's our ad valorem from the city of Jackson. It is consistently $72.6 million. It's set by mills. Again, if you remember that several years ago, we had to sue the city to make sure that the mills were set correctly to get that. And so we are projected again to request $72.6 million. If you remember what I said back when we talked about the audit, I think it was the audit where we looked at the local revenue, where we got a little bit more than we budgeted. We are allowed to receive whatever 65.91 mills brings in. We always ask for 72.6. So if we get 73, we're good. If we get 71, we've got a little challenge, but we always try to keep that level. I'll just talk about some of the larger ones. The homestead exemption, of course, is the district's amount that we receive from homestead, and it's not anything that we control. That's just an accounting that the state gives all school districts based on the number of homestead exemptions that are granted in the area. MAEP is where we get the majority of our MAEP dollars. And so we've done some projections on MAEP, and our assumptions this year so far in this column that said projected with level ADA is in line with that Senate bill that I talked about that they discussed on yesterday, keeping ADA the same. But let's talk about why there's a difference here. And I'll bring it up. So let's talk about charter schools. When we look at the charter school payments, if you look at 2015, 2016, we started out with two charter schools, Midtown and Reimagine, at 227 students at a payment of $595,000. That's how much we paid the charter schools in 15, 16. You watch where we went with 500 children in 16 and 17, 1.3, we've gone to 2.5, we've grown to 3 charters in 18, 19 to 4.8, 4.1. In 19, 20, we had 1,831 students and we paid $5.5 million. In 2021, we had 2,176 students that we paid $7.1 million. And in 21, 22, based on the growth that we've seen in charter schools, we're projecting right now 2,500 students, 2,563 students in charter schools enrolled next year. And again, this is in 5 charters at a cost, if we use the same per pupil amount as we did in the current year, would be an $8.3 million payment, which is an increase of $1.2 million to the charter schools. And we've talked about them before, about how their applications that when they initially sent the applications, about the number of students that they can have enrolled. And we're working to try to find out if there's any like penalties, because we know a number of them have exceeded the amount that they initially said in their application. But so far, the only thing we found is that if there was a change, that the charter is to go back to the charter authorizing board to get that updated. We've not seen any evidence of that occurring. So Senator David Blunt and Dr. Green have been working together to try to see what we can do in that area to make sure that we're holding everybody accountable to what the intention of the Charter School Authorizing Board is and has done for those schools. But for 21-22, we're projecting $8.3 million. I'll stop here for questions or reactions. Okay. So let's go back to this, which is why you see the difference in MAEP. This year, we included $7 million to pay charters. Next year, we're projecting with the same amount of MAEP, 8.3. We have pretty much looked at all of our other revenue. I will tell you this, other restricted grants and aid, that's a $600,000 allocation, that the reimbursement basically that the district receives from MDE for every nationally board certified staff member that we have. Those staff members on the average get about $6,000 a year for holding national board certification. That's teachers, counselors, speech language pathologists. They receive an extra $6,000 per year in their salary, but the state reimburses us that amount. So that's what that dollar amount is. Heavy trucks is an extra tax that heavy trucks pay to come into the city of Jackson, that the school district receives a percentage of those taxes that they pay. And we're projecting about $800,000. The proceeds of loans is this $20 million. That's the tax anticipation note that we talked about. We pay back early. And that's to help us have cash flow during those months that we don't receive our tax dollars until the spring. We've projected about $25,000 in a sale of transportation equipment. Mr. Albright and his team have committed to working towards selling off some of our old buses that we're no longer able to use, or our vehicles. And also we have included $250,000 in the budget next year for sale of property. You will see there's an item on the agenda for your information for Tuesday to declare some building surplus, because we've actually had some real solid interest in purchasing some of our vacant buildings, which we know that if we're able to do that, will help us in some other ways. It'll help us on maintenance costs. It'll help us on utility costs. It will also help us to fulfill that commitment we made to the community when we close these buildings, that we would try to use them to our best interest, but also to not let them become blighted areas of the neighborhoods. And we, Mr. Albright has worked really closely with a lot of folks to make sure, and we've had a lot of interest in purchasing our buildings. So we've included $250,000 there to sell off buildings. And other transfers in, we are not projecting a use of fund balance this year to balance the budget. We are, Dr. Green has challenged us, and we are challenging ourselves to live within the means that we have. We talked about fund balance and the need to keep that stable, and the need to keep that not just because it's an accountability measure, but it's good practice and it's good sound financial business. So we're projecting, again, in this column with a level funded ADA, the change here is the 8.3 in charter payments. And y'all see my little cheat notes to myself, because after you have a junior moment, as my boss likes to say, I have a junior plus moment because I'm older than he is. I have to put my little notes to myself. We're projecting a revenue of in district maintenance only, $181.6 million. Pretty flat, nothing remarkable there. But we have to be consistent because, again, in these areas, there's not a whole lot of room for school districts to make money. We just don't have the opportunities that private sector does. On the expense side, though, we've done some things here that we want to talk about as far as what our budget priorities are. Our budget priorities this year are primarily around our people. We know that it's been a challenging year for everyone. And not only that, we have recognized that our salaries are not aligned with salaries of adjoining districts, not even adjoining districts, but competitive in the marketplace. I have accountants that have been here for 17 or 18 years that are not making 30,000. We have IT folks who are not being paid commensurate with their counterparts in private sector. And of course, we can't compete with private sector, but we think, the school district is our most valuable resources after our children and our parents are our staff. We have got to get more competitive with our staff and maintain and retain those hardworking administrators and principals and assistant principals and custodians and bus drivers, so that they can make a living wage. So what we have projected this year is a adjustment in classified salaries and also in certified salaries. Dr. Cormack will talk about that, and I'll give you some briefing on classified, kind of where we are, but I want to run through this first and I'll give you a little bit more idea. And so those are our major budget priorities, while we are continued, of course, to be around our core mission, which is educating students. We certainly want to make sure that we are comparably paying our employees. So you will see here that what this contains is a certified salary increase for our administrators, the one step that's anticipated for all teachers because they receive it every year. This does not contemplate the teacher pay increase. And the reason is the state has committed that if there is a teacher pay increase, that we will get those funds from the state. Now, if you remember, we got it the first year, which was 2 years ago. They committed to giving us the raise for the teachers. This year, however, it got wrapped into MAEP. We had a meeting with MDE on yesterday with all the business managers and Dr. Gavin at MDE. And what they are committed to is ensuring that if there is a teacher and a teacher assistant pay increase, which those two are being contemplated now, that we will receive those dollars. So this does not include the amount of the teacher pay raise, only because we should get the same revenue as we would for the expense. Pretty much everything else here is stable. We are working I think we announced that our district will receive about $47 million in ESSER II funds. And some of us spent Monday, Tuesday, Wednesday, 5 hours of training, and Dr. Merritt and I did another hour of training today on ESSER dollars. And Mr. Albright has looked very closely at some of the activities that we do in facilities that can be moved to ESSER. We have until 2023 to expend those dollars. And a lot of those dollars are going to infrastructure and HVAC repairs and things that we can do to make our buildings safer and make our buildings in compliance with COVID. And so we've made some adjustments within our budget here to make that work. The team that's on this call, that's sick of hearing me say it, has done a whole lot of work. We've done a whole lot of work to make sure we balance. And if you look at the math, we're still $8.8 million out of balance, meaning we have $190 million in expenses projected and $181 million in revenue projected. But this is the number that I'm really proud of. This team, over the last 2.5 weeks, has made budget reductions in about $7 million. $7,093,000. And Dr. Cormack is, I have to watch him because every couple of minutes I get a notification that something else has changed, and he's been looking at cuts, and the team has been looking at where we can effectively make reductions without affecting instruction, without affecting our core work. So as of this point, we're still about $1.7 million out of balance. And I want to talk about some of the things that we have done in this work to reduce. We've eliminated some central office administrators and staff. We are schools that have low enrollment will be sharing librarians and music teachers, because the accreditation standard doesn't require that every school have a full-time librarian or full-time music teacher. And the elementary superintendents and the principals have committed to being able to share where they can. We've eliminated those remaining second grade assistants. We have a commitment to early education. So we'll maintain our pre-K center at Van Winkle, and we'll continue our focus on pre-K, K, and first grade for assistants. We've reduced office staff. We're continuing to look at teacher vacancies and where we can make sure we're not overcrowding our classrooms and still being very considerate of COVID and social distancing where we can. But if there are vacancies that we can close, we're closing those out. So we're continuing to make hard recommendations because we have some really ambitious goals. Want to talk about the fact that we do have, this budget does include about $489,000 worth of staff costs that were previously paid from title funds. And title funds are able to pay for, our district has used them for 30% of the expenses for the elementary guidance counselors at every school, and then some support persons and interventionists, intervention assistants, and all of that. But the allocations for title are based on student enrollment. When we have very small schools that don't have the enrollment, they can't support their staff. So schools like Boyd, Johns Hopkins, Lee, Leicester, Marshall, McWillie, Power Apex, Smith, Timberlawn, Lanier, Wingfield are having challenges with the number of students that are enrolled to utilize their title dollars to support the staff. So this budget does include about $486,000 worth of staff members like counselors, intervention assistants, interventionists that the schools need, and they aren't able to absorb within their existing staff members. But we want to mention though, and this is not, I want to mention that as our enrollment continues to shrink, we'll have to continue making those type of decisions. And unfortunately, once the district 1120 takes on those staff members' salaries, they can't go back. That's called supplanting. That's against the federal guidelines, and we would have to pay it back. It would be a question of cost. So there's challenges that we will face with this budget and moving forward in the other direction, in the next directions, and we'll be talking about how we respond and react. But right now, based on what we are seeing with level funding, we are still about $1.7 million out. We're continuing to monitor the conversations with MDE. I do want to just mention that we've done also a projection based on if ADA were to be adjusted as they have in the past for any loss of student enrollment or attendance data. We've done some projections there. I'm not even as confident that that's going to occur. We continue to see a lot of support around giving school districts, holding school districts harmless for the pandemic and all that has changed. We do know that about 23% of the students statewide have not returned to public schools. So there is a real appetite around holding school districts harmless and allowing them to keep ADA. I think I want to just kind of give you an idea on the classified raises, just to kind of tell you where we have been trying to land. And then Dr. Cormack wants to talk to you about the administrative raises. What we have found is that our starting pay for classified is $8.25 an hour. And based on what we have right now, we have about we have 125 current employees, bus attendants, custodians, dispatchers, equipment operators, records clerks that are making $8.25. What we are looking at is to raise that minimum pay from $8.25 to $8.50. And we're working with trying to see how we can manage any other adjustments there. I thought it was interesting because the $15 an hour thing, of course, minimum wage has been talked about in Congress. It looks like it may not get through this year in the bill. But I just took a look, and right now, out of we have 1,053 classified employees, about 953 or 90% of our classified employees make under $15 an hour. So we've done some iterations of that, and we're committed to making sure that that happen. Again, it's all about our folks and how good and committed we are to the staff and the hard work that they're doing. But not only are we going to be challenged with the budget, we're going to be challenged with maintaining our staff and taking care of our staff members who have worked so hard through this pandemic. So I'll pause here for questions, but I know Dr. Cormack and Dr. Seebeck, we said an hour and a half was going to be short, but it's a lot of information, and I apologize for feeding you with a water hose. But I do want to give Dr. Cormack time to talk about the administrative salary proposals and give you time for questions.
I had a quick question back to, you said that we were going to be receiving I don't know if you called it a grant. It was like 47 million. What was that? I missed it. And then and how it was going to be used again.
That's ESSERF to ESSERF. And I can't off the top of my head recall what it all stands for, but it's CARES Act money again. It's the second round. And so we'll be using it for instructional materials. We'll be using it for a lot of our ability to retrofit our buildings to make sure they're safe. There's a terminology that we have to use, that we're using, of course. ESSERF is it can be used for anything that is in response to and preparation of making buildings and buses safe for COVID, related to COVID.
This Robinson got you. Elementary and secondary school emergency relief fund.
There you go.
Very good, very good.
So we'll be coming back with you with a spending plan. We were, Dr. Merritt and I spent some time today with MDE. The application is actually due at the end of April. If we got ESSER 1 funds in early November, October, and we had until December to spend it. This year, thank good, and that was about $6 million, about $6 million. And we were able to do our network and purchase a lot of the Chromebooks and things that we did for our students to go one-to-one. But this will give us until 2023. So, you know, it sounds like a long time, but it's a lot of money. And but we'll be doing that to make sure our students and our buildings and are safe. They talked about things that you could buy, like buses, to make sure that if you need to social distance children and add routes, replacing all the water fountains with water bottle filling stations and things of that nature, all manner of things. And so it's right now looks like a lot is less restrictive than we've seen in the past. Thank you, Scottie Pippen.
Board members, any more questions? If not, I guess we're ready for Dr. Cormack.
Hey, good afternoon, everybody. Wanted just to give you some updates on some work that we've been contemplating with regard to assistant principal and principal salary. So looking at the school leadership level. As part of the materials that were sent for the work session, you saw a link to a YouTube video, basically a summary of some of the work and engagement that we've been doing since last spring with our school leaders around our district compensation model. So definitely encourage you to check that out if you haven't, but I'll briefly summarize some of that and then look at the broad level numbers. So our core values are clearly very important. Two that I'd highlight in this are particularly a focus on equity. And so really thinking about how we can use compensation as a signal to greater equity across elementary, middle, and divisions, but then also just looking at the work that our leaders do in comparison with other districts as a demonstration of value. And we really want our new compensation system to be a reflection of the excellence that we aspire to and look to fulfill each day. So just a few updates from the compensation review that was done. As has been shared, we contracted with the New Teacher Project to do a compensation review of our administrator salaries, both assistant principal and principal salaries. And the three primary findings were that our JPS salaries were not competitive with peer districts. And you can see the numbers there in terms of the gap, both for our principal leaders and assistant principal leaders. So fairly striking below the median salaries of those peer districts. Just as a reminder, the 6 peer districts that we took a look at were Madison County, we looked at Rankin County, DeSoto County schools in North Mississippi, Oxford School District, and then 2 regional peers, Shelby County School District in Tennessee, and then Birmingham City Schools. So we wanted to both think about patterns of receiving principal leaders, thinking that most of that would come from internal talent, but then also thinking regionally where we've been able to attract talent as a way to think about those as peers. Additionally, the study found that there's confusion and perceived inequities that exist among current school leaders. And 80% of our administrators said that they were dissatisfied with the model, and then 72% indicated that they didn't understand some of the criteria that were used to determine their compensation. So the step systems, other kinds of things, the mechanisms, how their advanced degrees or other things were factored in. So one of our big charges was greater transparency and clarity around the model. And then finally, retention rates were low when compared to those other peer districts. So 66% of principals and 43% of assistant principals were retained in fiscal year 20. And so we know that in order to really live into our strategic plan commitments and to build toward excellence, that means making certain that we retain really quality leaders. And so we want a compensation model that is reflective of that. So the new system, here's what we're proposing as some broad outlines, some recommendations around a new model. The first is that our salary schedule would place us in the top half of those regional peer districts, not at the very top, but working to be more competitive. And so utilizing that as a metric to be above, just above the median. Number 2, we would differentiate salaries based on degree attainment, but that those would be kind of narrow bands. So as we engage with principals and ask them, what seems fair to you? What are some other systems that you've maybe worked with or seen or experienced as part of the compensation model? And they said, value for degrees. Now we obviously know that simply having a doctoral degree or being at the top of educational attainment doesn't necessarily correlate to the impact. We have principals with a master's degree that might outperform a principal with a doctoral degree. Still, many principals felt like it was a fair system and that there should be some type of way that was reflected. So it is reflected in the new model, but the bands are pretty tight. So you get a bump, but it's not a really sizable one in terms of distinguishing. Then third, a school improvement stipend. So we wanted to think about ways to reward administrators whose schools show strong academic growth from one year to another. And as Ms. Miller has referenced many times at board meetings, we have the school recognition program that's funded by the state of Mississippi, but that is restricted to just teachers and to other school personnel. Administrators are not included in that. So we wanted to model a system that would be inclusive of administrators in a recognition program that we could base as part of incentive-based compensation. And then finally, an additional stipend that we contemplate here is a mentor stipend, not unsimilar to what we currently do with some mentor principals as principal coaches, where they serve a role to provide support specifically to new principals and to other colleagues. So the methods that were used, the benchmarking with the 6 districts that were mentioned, scale setting, so really looking at those other districts and their compensation models, and they found that a fair kind of annual step was at about $615 annually. And then modeling, so modeling out the system based on our current profile and composition of leaders to see what the financial impact would be for the district. So as you can see, the proposed increases, or based on the model, would project an 11% increase for principals, and that's their base salary, as well as a 12% increase for assistant principals. So what you see here in the table, and you all have a PDF copy as well that was attached to the calendar invite. As an example, elementary principals are here on this line. So starting with elementary assistant principals, you can see based on the fiscal year 18, where the salary stood, fiscal year 19, and fiscal year 20. What we'd contemplate is taking the average assistant, or the median assistant principal salary, from 60,000 to about 65,000, and that would be make it more competitive. So these are just median representations. Obviously, individuals are at various pay rates, but that would be the median impact. And you can see the median impact for middle school principals, as well as those at high school. And then here we have a representation of principal salaries. On the whole, our high school principals are much more comparable and a little bit closer to our peer districts. And so you can see that the adjustment there would be less pronounced, but specifically for our elementary school leaders, particularly those who are very seasoned, that there would be a pretty profound impact on the increase, and as well at middle school, taking the median salary from 74,000 roughly to 83. So an additional stipend that's been contemplated, and I'll break each of the 3 stipends that were contemplated out. We wanted to reward retention. We know that in order to, again, to build out toward excellence, you need to retain leaders within those roles. And as over the last several years, we have raised the bar and engaged in really difficult conversations to encourage less well-performing leaders out of principalship. We also know that while raising the bar, we also want to raise the bar of our compensation expectations as well. And so the New Teacher Project proposed a retention stipend that would be awarded after 5 years of service within the role. Additionally, the school improvement stipend, which I mentioned, and we have shifted some of the numbers here to kind of model out the potential costs for this. But again, this would be modeled after the school recognition program, but for administrators, and would be based on our letter grade accountability model within the state. And so we would propose not implementing this straight away. Obviously, we won't have test scores. And so this is something that we could signal an intention to do, but wouldn't immediately need to activate this year, given the lack of state testing, both last year and this year. Will take some time to, while we'll test, we will not have a letter grade. What we contemplate here are a variety of different stipends for moving a school and growing up a letter grade, and then also maintaining A or B status. And then finally, the mentorship stipend, which I mentioned, which would allow some of our senior and more seasoned administrators who have a track record of success to serve in the role of mentor to their colleagues. So here's brass tacks. our current compensation system, both for principals and assistant principals, runs $8.4 million roughly annually. And the new system, once fully implemented, and we can discuss a variety of different strategies that we are contemplating to move toward this new system, we estimate that cost to be $9.5 million. That's base compensation. And then when you add in the additional stipended amounts, those are the overarching costs. So the total cost for implementation, if it were done in a single year or over a number of years, or number 2 years, would be $1.3 million, or a 16% increase in the total cost that we associate with compensation. But it would move us toward greater local and regional competitiveness. So in terms of next steps, and I shared this guide, we're here presenting this to you all. And this presentation was also shared with our principals, just to let them know and to have them be a part of the conversation to inform them. But we would look to align on a strategy, because as Ms. Miller mentioned, we're not currently at balance. We're looking at ways to make the additional cuts to make this happen. And we've contemplated a number of strategies to get us there. But the response from principal has been really very positive, assistant principals as well. And we hope that we can move this work forward, because our principals and assistant principals, like our classified staff, deserve a raise. Happy to entertain any questions that y'all might have.
I want to just say that this is wonderful. Long overdue, I'm sure. The sustainability, how do we plan on making sure that this is sustainable for years to come?
I can chime in. Yeah. I mean, that is maybe the second $1 million question. The first, or $1.3 million question. The first is, how do we make it work even this year? And so we've been looking really critically at how we operate, how we do our core business, what it takes to do our core business, and not just to get by, but to do it effectively. We've been having and continue to have some really hard or tough discussions about the size of the district. And we anticipate coming to you over the course of this next year and into the fall, well, over the course of this calendar year, into the fall and towards the end of this calendar year, coming back to you with some recommendations around just the size of our district and how we reorganize in ways that we can live into the true costs, because we're not actually paying for the true cost right now of educating our children, right? These salary increases have to be factored into the true cost of educating our children. And so as we think about that and think about like what it takes to get our children and to where they need to be and to provide the service to families and to hold our team members accountable for doing really powerful work, these have to be factored into those costs. And so as we think about those things, we've got to, again, look at, our footprint across the district and all of that. So we'll come back to that later, but that's one of the key ways that we see addressing a bit of this. And last piece is, we spend a lot of money around professional development and appropriately so, right? That's really important. And we launched our strategic plan, and we have been cultivating, as you know, because we've been reporting on this, we've been cultivating some really powerful relationships with donors to stand alongside us and support us with that strategic work and capacity building, such that the dollars that we spend can get closer to the children, direct service to children. So as we think about all of those things, we anticipate, we're confident that we start to create more space for this to be, realistic and feasible in out years. While I've got the mic a little bit, just wanted to say a couple of other things, and I know we're coming towards the end here. So I mentioned the private dollars to support our strategic priorities in that. We're not presenting that as part of the budget here, but I want to constantly keep that in front of you, because we're thinking critically about what it costs to do all of the work that we've envisioned, and it's not just how we keep lights on and how we do our day to day. It's that longer term vision as well. Two, just want to be real clear, the team has done some really remarkable work in rethinking the budget and our available resources in that, but we need to be careful not to paint this as a crisis, a budget crisis. It's a challenge, as it was a challenge last year, and as I'm sure it was a challenge the year before that to get to the budget that makes sense. It's a challenge. But part of the challenge here is that we're trying to do something that we hadn't done before, right? So just want to be real clear for all of us that we're not speaking from or thinking from the crisis mentality, but for these are opportunities that we want to seize and that we need to seize. And then the last thing, just our continued efforts to operate with excellence and efficiency, as I was saying, and it's especially just keeping in mind the decline in our enrollment.
Thank you, Dr. Green. Board members, are there any other questions? If no other questions, we can, Dr. Harrison, did you have something? You sure?
We don't have time for it today, but and I appreciate all the work and with looking down the road of our declining enrollment, but does it make any sense to imagine increased enrollment, or is it just our population is declining? I mean, I hate to just automatically go to, well, we're going to decline every year. I don't know.
I really appreciate that question, and I'm trying to be more disciplined in how I talk about this. It's the we're still not right-sized to where we are today, and so it's taken into account the declines that we've experienced already. But you're absolutely right. We're working in ways and creating programs and educating and performing in ways that will turn around the story, the narrative of the district, the performance of the district, and start to attract folks back to the district, and certainly maintain the folks that we have today. So to the extent that families can continue to remain in the area with jobs and whatever other decisions that they make as they leave the city, we absolutely want to envision our district on a plateauing and then an upswing in terms of, yeah.
Right, and I appreciate that, Dr. Green. And also we've got to get on this charter school enrollment that nobody seems to be addressing the law and their accountability. Are we just gonna sit back and let them over us over and over again?
No, and it sounds, and not sounds. We've found some folks in the community, not just community, but in the legislature, who are also looking closely at it.
Yeah, just to bring it to folks' attention, because it's just patently unfair, and it diminishes our district's worth and our upswing that we know we're in, even in the midst of the pandemic and the freeze and all of that. We know we are moving up and we're improving and we're stronger and better. I don't want to just take that line down. I want to fight.
I totally agree. I totally agree with you. And especially when they are not held to the same standards that we have to be, or accountability that we have to be held to, and are getting our babies and not,
Yeah, I mean, on so many levels. And you reminded me, board member Thompson, that there was something recently in the news, and I'm brain freeze right now, but somebody help me. But we have to meet that standard, but the charter schools don't. Just patently discriminatory from where I see it. So please keep that on the forefront of our movement to not accept mess that just comes down because other people are getting privilege.
Yes, ma'am.
And something that was brought to my attention just recently too, and I didn't know this was happening, but we're a lot of our older students are leaving because they want to play sports, I guess ball or whatever, play football, and they're transferring out. And I mean, and I'm not necessarily pushing sports per se, just, you know, because I understood the reasons why we held back on that. I completely understood it. But I just want to see if we had more communication with parents, understand that, you know, and don't, you know, just hold tight. You know, we're here, and you know, and then every kid is not making it in the NFL or the NBA. Not every one of them, and they need to have a better clarity or vision on academics and school and trade and other areas along with sports. You know, because everybody's not gonna make it big. So don't try. Even when you go to them colleges, they just using you too, basically.
Using the
depending on which college you're going, you're not making no money when you go to those colleges. So playing ball.
And then they're not making any money when they go into these private schools. No money coming into their mama's pocket. Not that we know
money
of.
coming out of their parents' pockets.
Yeah.
And out of ours.
And it's not any better, but they're getting our top athletes to make them look good, and then they use us like historically we have been used. We have to fight it even for no other reason than on principle, and bring it to the attention and get political and say you can't keep doing this because you know, it's got to be told. The truth has to be told.
Absolutely.
Amen. All right, board members, let's we're gonna move on to information action items. Just Ms. Spears, did you have something?
Yeah, let me just say this, Madam President. Right on, sister.
I'm in it to win it every day. It's too much mess and happened too long. And that's why the fight is so hard to hold us down, because they know we rising up. Excuse me, let me hush.
All right, board members, we are at 3 o'clock and we have 2 action items. So information action items. The first one is Dr. Green.
You want me to do it? The administration is requesting approval of the superintendent's recommendation to grant administrative leave for staff who were not able to work the week of February 22nd through 26th. And also in the event that the next week, March 1st through the 5th, is required to also declare administrative leave for those staff members who are unable to work, which would give pay for those staff members who are unable to work at their work sites or alternate work sites without having to use their leave and or be docked.
Thank you, Ms. Miller. And the only other note on that, thank you. The only other note on that is Mr. Albright, Ms. Miller, and other team members have been working to ensure that all of those team members, those classified team members who were able to provide some level of service, that they were engaged in that, whether it's delivering meals, helping to prepare meals, working at buildings to clean up, floods, on and on and on, that folks have been assigned in meaningful work to the extent possible. So this isn't a complete gimme. And of course, this week, our teachers have been working, whether it's from home or in buildings, if they had power or no water, or power issues or no water at home, in buildings, et cetera. So we've been managing through the crisis between our buildings and individuals' homes. But just want you to know that this isn't a complete blanket gimme, nobody's working, and just pay them.
Thank you, Ms. Miller and Dr. Green. And I appreciate those additional efforts to make sure that people were being used for where they could be. Board members, are there any questions or comments? If there are no questions or comments, is there a motion to approve action item A?
I so move, Madam President,
Second.
for the approval of action item A.
Ms. Hilliard has moved and Dr. Luckett has seconded. All in favor?
Aye.
Aye.
Any nays? There being none, the motion is approved. Next, we have Ms. Lyons.
Great afternoon, Board President Johnson, Dr. Green, and board members. The administration is asking for the approval of the issuance of contracts for teachers, counselors, librarians, and psychometrists for the 2021-2022 school year.
Thank you, Ms. Lyons. Are there any questions, board members?
I have one. Just to verify, we will get waves of these, correct, as more of them are brought online? This isn't all for next year, is that right?
That is correct, sir.
I'm sorry, I didn't hear his question.
It was just affirming that we'll continue to get more waves of teacher contracts.
Yes,
All right,
sir.
board members, are there any other questions? Any comments? If not, is there a motion to approve information action item B?
I so move, Madam President.
Second?
Ms. Hilliard has moved, Dr. Harrison has seconded. All in favor?
Aye.
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 Any
Thank you.
nays? There being none, the motion is approved. Thank you, Ms. Lyons.
Thank you.
All right, board members, is there any other business?
Just want to thank you all and name that this is pretty early for us to get out with contracts. And it represents our effort to be as competitive as possible in giving our teachers options and letting them know that we want and need them, and so they can plan for their lives. So thank you for this. And this is, you can expect that we'll be doing more and more of this, getting out earlier with our contracts so people can plan and make those decisions.
Excellent move.
Mm-hmm. Mm-hmm.
Thank you, Dr. Green. Board members, we have completed our work session. Is there a motion to adjourn?
So moved.
No?
Second.
Or if y'all want me to, but
You did good. Bye.
Dr. Luckett has moved and Dr. Harrison has seconded. All in favor?
Aye.
Aye.
Any nays? There being none, this meeting is adjourned. Thank you so much.